In this video, we're going to take a look at PayPal's price action, both on the daily, weekly. We'll take a quick look at the options as well. And we did have earnings a couple of days ago, so I'm going to go through that. Just a quick overview. I'm going to put the full breakdown on my website at www.thecraftytrader.com. Starting with the daily, we did have earnings a couple of days ago, and we had this beautiful gap up straight above this historical resistance, just over the bull market band, and pretty much coming up to this volume shelf. This was beautiful. Can't hate it. It did wick down from this diagonal trend line, which made sense. And it's had another pop-up keeping over that yesterday, but that didn't hold. So it looks like it wants to break back down below this one a little bit, which I don't mind at all if it wants to do that. A little bit of chopping here before breaking out. Can't hate it. We did have the rate decision yesterday as well, so that probably put a cap on things. I didn't listen to it, but a pause was had, so I'm assuming JP said more of the same. Now, there was some war news yesterday, battle, whatever you want to call it. I don't want to talk too much about it, but that did put a dampener on the market. The market did initially seem quite happy with JP's comments by the looks of it. Haven't been back through them to confirm that yet, but judging from the timelines of the price action on the main indexes, that's certainly what it looks like. Looking over the chart, though, we can see that this is going to be quite a tough area to break through to get back into the gap. With this level has held for some time, and I don't see that getting any easier. But if we can break over that and back test it without falling back underneath like we did here, that's going to be very bullish. That will be the start of a confirmation for a reversal, which I think is what most PayPal investors are looking out for. Now, the fundamentals seem to have shown that shift recently, so it's quite essential that we see that continue. We'll talk more about the actual numbers after this, though. So the upside target, next one's going to be this gap fill here at 72.41. For the downside, this area of support is going to be a good one. 62.58 is going to start at. The RSI is getting a little overheated, so it makes sense that we might see a little bit of a pause or pullback here. The whales are really stepping in now, though, which I love to see. Retail absolutely got flushed out after earnings, which I really like. And the flow is bullish after this golden bar, which I love. Taking a look over on the weekly, obviously it's a bit easier to see. We got the clear rejection here again. It's 1, 2, 3, 4, fifth time that's happened. So the more it knocks, the stronger the likelihood that it gets through, and that's quite a lot of knocking. The RSI is flat on the weekly. Whales are coming in a little bit on the weekly, but retail has still got plenty of space there. The death cross is still active. We did pinch together back here, but it does look like it wants to turn back around, so we'll keep an eye on that one. The flow has paused, so we'd like to see that one flip green on the weekly chart. That'd be really nice. Other than that, it's starting to look like it really wants to flip, but it might be too early to confirm. But like we mentioned on the daily chart, if we can get a breakout above this level and a back test, I think that's going to be a really bullish signal for this stock price. Moving on to the open options interest. It looks pretty crowded for earnings week on this one, to be fair. 70 is going to be the peak level there, and $64, which is where we're currently at. That's holding. The downside doesn't look too focused, but there's going to be good support at both $60 and $56. Probably better to look at next week on this one, given that it's already Thursday. A lot of bearish volume there at $49. Keep an eye on that. Don't like that. Don't like seeing that. But it will be very strong support if we do break lower. But I don't know why we would break lower from this level, given how good earnings were. However, we can take a look at January 2025 and see what the longer time frame looks like. Still great. Still got a nice one at $100, which is my current target. You can check that out on my website as well, my full thesis and thoughts on prices and whatnot. But 140, 145 is where the market's currently looking to take it. And Jan 2026. Don't know why it's not showing the higher targets, but I mean, it's still pretty bullish from prices, so $95. The last thing we've got to talk about are the earnings for PayPal. I've lifted this data from Wall Street Engine over on Twitter, X, whatever you want to call it. They did nail pretty much everything on the head. The only thing they missed a little bit was the international net revenue, but it was still year over year very healthily, so can't really complain about that. I did find the earnings better than SoFi, although I think I preferred the earnings call on SoFi. I just really loved Noto's energy over there on that one. But I mean, feel free to pause this video and have a look through these. I'm just going to pick out some highlights. I really enjoyed the share buyback. They're going to push that more to 6 billion at these low prices. I think for me that signals that they're very confident in where their business is going and they really want to buy back these cheap shares, which as a shareholder, that's quite nice to see. Obviously, free cash flow is really starting to lift up again. EPS, very nice year-over-year beat. I would still like to see more staff cuts. I think that's going to be quite important going forward. I still think the company is way bloated. User accounts down a smidge, but not too much. So we weren't expecting too much on that to change. Payment transactions up though. So, tit for tat. Can't hate it. Moving on to visual stocks. I just find the visual representation of these numbers a bit more easy to read. For some reason, I really struggle with the numbers. But quality metrics wise, loving this. The financials of the company are outstanding. Return on invested capital, great. Cash to debt, great. Risk of insolvency, great. The only thing that's not great is gross margin, but we know that, and that's something that most PayPal investors are looking at. We do expect that to increase in the coming year. Obviously, we know the bears. This is what they always talk about. God, I'm bored of hearing it, but we'll see how that holds up in the coming quarters. PE ratio and forward PE ratio, I still think these are cheap when we compare it with its peers and also with its potential growth given the products that it's bringing to market. And if we look down here though, active accounts were up a little bit, which is great to see. Total payment volume continues to go up. Transaction margins is what we are talking about earlier. Margins still going down, although it looks like they came up a little bit. We'd love to see that. This is definitely something that they can work to improve on going forward. Revenue segments continue to go up. Net income still good. Cash flows come down a bit, but still positive. Shares outstanding. I love how aggressive they are being with these buybacks. Cash to debt still looks good. Operating expenses still flat. Running a tight ship over there. I'd like to see more employees get cut. As nasty as that sounds, this is way too many employees. Short interest is still 1.97%, so relatively low. Moving on to key charts. Take rates down a little bit. Probably going to see some bears moaning about this as well, but very negligible. Number of transactions is up slightly from the last quarter. Still a little bit flat, but the trend is our friend, so nothing really too worrying. Transactions per account, pretty much the same as last quarter. Historical margins, starting to see these lift up again. I like that. That's definitely what we want to see. Stock-based compensation, not really an issue for this company. It's very low. Operating leverage, love this just keeps expanding. Monthly active accounts up a little bit, but nothing too major. Transactions per active account also up a little bit. It's good to see it's always grinding higher. Even though we've got such a large workforce, it's good to see that the revenue per employee is grinding higher. I think though with some staff cuts, this is going to shoot up quite nicely. Quick look at estimates. More right and up. So that's all good. That all looks great. Activity wise, a lot of buying going on. Institutional ownership is still down, so Wall Street's still not getting on board with this one. Yeah, but the short interest is relatively low, so not sure. And if we take a more detailed look at the institutional ownership, we can see it's still grinding down, though it appears to be leveling off. I'd like to see what this reads at after this earnings for next month, as I suspect they might start changing their opinions on this a little bit, but it's going to be nice to keep an eye on that one. Just to cap it off, really, just wanted to switch back to the CEO, Alex Chris's statement. He pretty much nailed it on the head. It's still a transition year. Transaction margin dollar had their best growth since 2021, which is exactly what people want to see. So, I mean, the ship is definitely turning around. Has it been as fast as people expected? Probably not, but I don't know how agile you think these mega-sized companies are. It's going to take maybe at least a year to get things rolling back again. But I think things are definitely on track. My thesis is intact, and I'm very happy with my overall position on this one. I think once the ball does get rolling, it's going to be, pretty good. I think the party's only just starting on this one.